David, I want to make sure we talk a little bit about real estate. We've seen a real change, especially toward the end of last year. I've been predicting for years that the high end, what I call cyclical markets on the two coasts and in South Florida are highly overvalued. Same with markets like that around the world, highly overvalued, way past the point of fundamentals. And finally, the slowdown really is happening. The New York market is just crashing like crazy. We're seeing this. The lower end markets, those sort of bread and butter, what I call linear markets, are holding up very nicely. And in fact, inventory is still very scarce and prices are still rising in those markets. And of course, you can't talk about real estate without making it local. But from a national perspective, any thoughts on real estate?
Yeah, several. One is that after the 0809 bust, we had this odd situation where obviously people were liquidating their homes like crazy. We overbuilt the houses. People then got foreclosures, and the houses went on the market. We had a glut.
Oh, strategic defaults left and right, millions of them. I mean,
Right.
yeah.
And so then what happens is following that, you find that home ownership rate is dropping and the prices are rising. And anyone who knows free markets would say, how can that possibly be, right? The supply demand curve is broken at that point. Turns out the buyers, I think, are private equity.
Mm-hmm.
So there are these big companies that are buying up single family dwellings.
Oh, yeah. And like never before. America is really becoming a renter nation. You
Right.
see these, we've never had this happen before where these institutional investors have owned thousands upon thousands of single family homes. This is a first in history, what's happened over the past 9, 10 years.
And the reason we never have, and this is what's critical, is that it's a lousy business.
Mm-hmm.
And so if you wanna
It's a very fragmented business, and I don't think they all have the tolerance for it.
margins are razor thin, if at all, if they even exist. And so if you want to house lots of people, you make a rectangular building and you make rectangular units and you pack them in tight like sardines.
Like an
That's
apartment,
how you
yeah.
make money.
Right.
That's how you make money, right? Like apartments, like condos, you name it. Single family houses are awful businesses. So what made them possible? Well, ultra low interest rates gave them a razor thin margin to make money, and then they levered up.
Mm-hmm.
And now in a rising rate environment, and I think we're going to reach some threshold where as the rates rise, there's no longer a profit in it. Now, here's what ought to happen.
But wait, if they have the advantage that the traditional investor gets, which is pretty awesome, a 3-decade-long fixed rate mortgage at an artificially low interest rate, arguably a negative interest rate below the rate of real inflation or at par with it, they're pretty good now. I don't know enough about their financing at an institutional level. They don't get those Fannie Mae loans. They're probably much shorter than that, right?
Now, that's an excellent point. So then the question is, what are the odds the private equity guys threw it out 30 years?
Yeah, I doubt it.
And I think they did some real short-term, ultra cheap stuff.
Typically what they do. That's
exactly. And so now you're going to have a liquidity problem,
Mm-hmm.
because these guys are going to be rolling over loans and they won't be able to get them at the rates they need them.
Mm-hmm.
So what are they going to do? They're going to liquidate real estate.
Yeah, right.
So we are going to see the 0809 glut finally show up.
Mm-hmm.
As the rates rise. There'll be some threshold. And then you got places like Palo Alto, the median house is $3 million.
Oh, that's beyond absurdity. I mean,
and you got all of Canada now crashing, right? Canada's now the real estate market.
Vancouver was the poster child for ridiculous appreciation. I mean, just beyond ridiculous. $2.5 million teardown shacks in Vancouver. I mean, you can't make this stuff up.
And some of them are not tore down. I posted a picture one that sold for $2.6 million, I think it was, and it was just a pile of sticks. It was no longer a house.
Unbelievable.
And you got Australia apparently is giving out now. I heard London's giving out now. And so I think we're starting to see a cascading failure, because I think the banks around the world are all trying to tighten.
Yeah. I think it relates to your stock market discussion earlier. When we see these areas, these tech-saturated areas, namely Silicon Valley, but of course there are many others around the world, everybody wants to be the new Silicon Valley, right? When we see these stocks finally get in line with real legitimate value, and other normal economic pressures and the share buybacks waning and so forth, I think those housing markets in those ultra high end tech oriented areas are really going to suffer. I mean, they've got to.
What my understanding is, people are leaving Illinois for the first time ever. People are leaving San Francisco for the first time ever. That there's
people have been leaving California for quite a while, rightfully so too.
And so I think they will equilibrate. I think we will regress to some mean. Maybe it's going to be more expensive than Ithaca, New York, but I think they'll price correctly. I was told when I think it was Genentech, they said the only people who can afford a house are the founders.
Yeah, right.
It's just that crazy.